and welcome to another tutorial. This one is a continuation of my cash flow statement short video. In this one, we are going to look at a short question where we will be preparing operating activities section of cash flow statement using the indirect method. So the first step that we will take care of is to identify which activities fall into operating activities and which activities will fall into investing and financing activity. So let's look at the numbers that are provided to us. So first of all, in indirect method, we start with net income. So this is a number that we will surely need when preparing operating activities section using indirect method. The second one here is collection of dividend revenue. So this would be actually reported in financing activity as a cash inflow. Then you have payment of interest, which would have already been deducted from the net income. But if we have to classify specifically speaking, then this again would be a financing activity under cash as in cash outflow because it is a payment. Then we have sales revenue. Now this has nothing to do with cash flow at this particular moment. If you were using direct method, then yes, sales revenue is important, but right now we are considered about indirect method for operating activities, so we will ignore this number. We will ignore sales revenue for now. Then we have loss on sale of land. Now this is an adjusting number, so this for sure would be needed for our operating activities section. And we will see in the next slide how we will treat this number. Then we have acquisition of land. Now this is purely investing activity. The company purchased an asset, the company purchased a land. So that's an investment, right? That's an investment. So this is a cash outflow in investing activity. Then we have depreciation, which is a non-cash expense, So we will add this number in this net income. We will add depreciation in the net income. If you remember income statement, we deduct depreciation from income statement. But in this case, we will add depreciation expense to net income simply because it is a non-cash expense. Then we have decrease in current liabilities. This number is important for operating activities, and we will see how we will treat this number. Then we have increase in current assets other than cash. This is also important for operating activities, and we will see how we are going to treat this number. Then we have payment of dividends. This is again a financing activity. So you see here it was a collection, and here it is a payment. So this one is inflow, this one is inflow, and this one is actually an outflow. So payment of dividends would be in the financing activities section as cash outflow. Then you have payment of income tax. Again, we will ignore this number for now. So this has nothing to do with operating activities section at this particular moment. So let's look at the solution, and this would actually give you this is the format for operating activities section. Under indirect method, right? So you will, first of all, you will start with net income, that is 39,000. So if you go back 39,000 here, this number, so 39,000 net income, right? And then we will do some adjustments. So the first adjustments that we will make is to add depreciation. So if you see here 18,000, if you go back, we have depreciation number here as 18,000. So we add depreciation expense because this is a non-cash expense. So we add back the depreciation. Then we have loss on sale of land. We will add this number as well because in income statement, this would have been deducted in income statement. This would have been deducted. So in this cash flow statement, we will add this number. So if you go back to this number is here, 23,000. So loss on sale of land will be add back to the loss on sale of land would be added to the operating activities section. Then we have increase in current assets other than cash. So there's an increase. Whenever there's an increase in current assets, we deduct. So there's a rule, whenever there's an increase in current asset, we deduct. That's basically meaning there's a cash outflow. That's a cash outflow. Whereas if there's an increase in current liability, then we add, because that's cash inflow. So this is the rule here that we basically follow, right? So for similarly, if there's a decrease in current asset, you will add, and if there's a decrease in current liability, then you would subtract. So if there's an increase in current asset, you will deduct this from operating activities, which is minus 25,000. Again, this number has been provided to us in here. Then we have decrease in current liabilities. Decrease in current liabilities, that's again a cash outflow, right? That's again a cash outflow, because we are reducing, the company is reducing the liability. So there's a cash outflow. Therefore, this number would be minus as well, right? So minus 19,000, minus 19,000. So minus 19,000. So this number is given in here, right? So we are done with all the adjustments here. If we go back, so we are done with all the, we take care of this number, we take care of this number, and we took care of this number. Rest of the activities are not related to the operating activities section. So we are finished with all the adjustments here. And once we are done with the adjustments, we finally get this number called net cash provided by operating activities, which is 36,000. In other words, the cash the business generated from operating is $36,000. That's what it means in very simple language, right? So 36,000 is basically the cash generated from normal day-to-day business operational activity. I hope you found this video helpful. If you found this video helpful, please give it a thumbs up and subscribe to my channel for more videos like these. Thank you very much for watching.